Okay, hello Futex traders, and welcome to this price ladder analysis stream, where I'm going to be going through a specific setup, well, sort of a setup, pretty much looking at raw price action just after the cash opens up on the Bund future. So we're going to be looking at is the cash open on the Bund futures. And specifically, we're going to look at a bit of a setup where the actual um, initial balance, so the initial balance is small. So usually when we have a small initial balance, it's interesting because um, more often than not, I don't know the exact stat, but more often than not, the cash does break the one side of the initial balance or the other. So we do get a breakout on the open of the cash. Now, if you have a small, let's say you have a big initial balance. If you had a very big initial balance, and that big initial balance represented the width of a book. Let's say you stood a book up. This was your book. Let's just say it's a hardcover book. These are all the pages in the middle. If you get the idea, these are the pages in the middle. So let's say you had the book, and the initial balance is the width of the book. Now, on the cash open, the cash will try and topple the book over, and that is basically what will represent our breakout. Now, the bigger the initial balance, the harder it is to actually topple that book over. And usually, when you have a very big initial balance, so when you have a big initial balance, it's harder to break out, or in this case, topple the book over. If we, for example, had a small initial balance, so we had initial balance, a very thin book. In contrast, so this is a very thin book, and our initial balance again represents the width of that book. When the cash comes in, a very thin book is more likely to get toppled over and break out. So that's usually how we see it, and usually the smaller initial balance, the better the breakout. And that's obviously granted that we have the usual sort of volume and volatility that we would have on any other day. So that is obviously something interesting to look at in any case. So if we just take a quick look, and we'll just quickly erase that. If we just take a quick look over at this specific setup, what we're going to be seeing is the open of the cash around 156.80s, as you can see in here. Now the value area high of the previous day, just a few metrics, is at 156.86. You can see we've already stopped. We've already managed to stop at 156.87. That is a lot thicker than I wanted. 156.87. And we're going to be seeing how the price action reacts just off the open. Now, one other metric to know is that being as we're trading in here, we have a closing gap which comes in at 156.99. So 156.99 is our closing gap. That's where the market had closed on the previous day. So we'll take a look how that traded out once the cash came in. So if you just bear with me, I'll start this up for you guys. Okay, so here we go. We're watching the price action here at 156.81s. We've just opened up now. Let's just take a look at what we're seeing here. We've just gone bid 156.81s and just gone bid again at 156.82s. Done a bit of buying just around this area now, so we're looking at the price action in here to see if we get any sort of inklings or clues as to where the market's going to break, either to the top or to the bottom. So we've just gone off for it again at 80s, 81s, traded into 80s, very little size. As soon as there's someone's trying to sell into 81s, but someone at the minute seems to be lapping that up and just absorbing it, as we would say. So someone kind of reloading at these 81s. And we want to see in and around this area who's going to be the more aggressive, the buyers or the sellers, to see if we're going to get the break on either side. Obviously, we are closer to the lows of the day at 156.78. So obviously that would be closer to break. But at the minute, someone seems to just be lapping up a little bit of volume. And anytime someone sells into 81s and into 80s, there we go. Someone's just aggressively, after reloading, has just aggressively come to market and just lifted 81s, 82s, and 83s. So we're seeing a little bit of aggression on the buy side now. We want to see if we can possibly get involved on the buy side around 83s. If we can get filled in here, potentially we might be able to get on a little bit of flow. So we're not seemingly getting filled. We'll just take off. We'll just take some at 84s. Try and get a little bit more 84s there. Now, essentially, with the way the price has just reacted around this region, we're looking at, if we get filled here, we're going to be long 10 at 84s. The buying came in at 81s and 82s, so our risk really is 80s. So we're giving ourselves 4 ticks of risk, and we're essentially looking for break of this area in here. But if we can hold through those 87s, maybe we can hold on to this trade and target our 156.99s, which is our, as we said before, closing gap. So currently we've just opened up. We've been so we're around 156.80s. We've tested. We're reloading a bit, 80s and 81s. We've gone back bid. Now we're not holding above that previous areas, and it seems like we're starting to go bid above those 87s now. We can't seem to. We didn't really get that second clip at 84s. So let's just see if we can start getting involved in here. We want to see if the market can actually hold this bid above 87s. If we can hold this bid above 87s now, there could be a little bit more scope to the upside. So we're going to see how the market reacts above these 87s. What's good to see is that we've actually left a bit of a low volume node, as you can see right in here. So we've got a bit of a low volume node in there, and we're actually trading a little bit more size at 88. So we're actually accepting right now. We've just turned 80s into our VPOC. Most accepted price. So it seems like the buyers are actually trying to do a lot more business to the upside now, which is a good thing. And effectively, if we can hold above these 87s, we should be able to sort of extend to the upside. Now, what we're going to try and do here is try and get a little bit more size on them here at 88s. If it allows us, it's not looking like it's allowing us just yet, but we'll try and stay patient to see if we can get these. Effectively, what we're looking at here, in essence, is we had a range between 156.87s and 156.78s. So we had a 9-tick range. This is our 9-tick range. At the very least, we should be expecting 9 ticks to the upside through here. So from 87s up to 156.96. So this is going to be our first target. Because we've got 9 ticks, we're looking for the same exact extension to the upside at the very least. And then if you want to be a little bit more, we're looking for a little bit more out of this, then we're going to be looking for to get out at 156.99s. Well, just ahead of that, we'll probably front run that at 98s. Currently, we're still bid at 89s. We're not really getting our fill at the minute, so we might actually have to go to market at 89s instead of 88s. We're bid 88s. We'll throw that in at 89s, not seeming to get that. The market's now throwing a bit more size at 91s. It seems as if we're trying to get a little bit higher here. I'm going to try and potentially get involved just below that, but you know what? Having a second thought about that, just because the risk reward's now diminished at 92s, between 92s and 95s. Now I'm holding a little bit of excess risk, so I'm not really going to try and get involved there. What I'll do is instead be a little bit more disciplined. If I get my 90s, I get them. We've seen the buying step in. You just saw that 4 or 500 lot. Just step in at around this region here at 90s, between 89s and 90s. We just saw 4 to 500 lots come in and try and bid up the market. and essentially he couldn't get filled, so he ended up coming to market again. You see another 4,500 lot bid there. So is that going to hold the market now? Try and see if we can potentially get involved just above there. Might need to see if we can just get sold. Okay, we've just gotten filled to those 90s. Now, essentially, because that is a very aggressive style long, and essentially because we've come in pretty aggressive into the market, and we've said, okay, well, we didn't get our 87s, we didn't get our 84s really, we didn't get our 88s. Now we didn't get our 88s, so now we've just bid at 90s and 91s. We've just got filled on that. Now our risk on that is literally 1 to 2 ticks. We don't really want to see this offside now. We've just taken that fill, and effectively, just because we've seen a little bit of buying step right back into the market, and we're looking for a very, very short-term scalp, trying to get out of these 95s to see if we can get filled here. We just took out 5. Now, like we said, we want to be front-running this level at 99s at 98s, probably offer 97s and 98s to see if we can get filled there. The market's now doing a bit of exchange. We're seeing a little bit of size step into the market here at 95s. You can see another 500 lot here. And the amount of size that's actually getting done in front of it, 100 lots being bought at market. We've just been filled there at 97s. So all we really have now is a 5 lot into the market, and really don't really want to be getting out until this hits that 99s. Now, as general rule, we're pushing towards that closing gap, and since we know we've got that closing gap, since we're heading towards that closing gap, I'm looking for that closing gap to trade out. Now, it doesn't have to trade the whole price out. As long as it trades it, I think it's a high probability that 98s will effectively trade fully out. We're looking for the closing gap to trade at least. If 99s trade, that means I would have been filled in 98s, and that effectively would be the end of this small little setup that we've had here. Let's just see how the market reacts here. So we're just trying to lift these prices here. We're just seemingly someone's reloading at these 97s. We keep buying into this area, about 170 lots at a time. It's someone's reloading, just lapping that up a little bit here. So after that pretty aggressive move to the upside, we've seen a little bit of a seller step in, but nothing crazy really, because the market hasn't effectively, since we started going quite aggressively bid. Since we've started going aggressively bid, so we had our initial balance. Just delete that, do it in another color. So we had our initial balance. We started our bid up like this. We reloaded here aggressively to the upside, and we're just kind of aggressively pinching new highs and new highs. That in a price action perspective, we have not been able to go more than 3 or 4 ticks offered. So this has not been more. The pullbacks have not been more than about 2 to 3 ticks. In fact, I don't think I have seen a 3-tick pullback. So that is a sign of aggression. And if the aggression is still there, there's no real reason to come and try and get filled. And we just finally did get filled on those 98s, as you saw in there. That is pretty much the end of that little setup. But effectively, what I was trying to say there is, if we're seeing the aggression, if we're seeing the price, the buyers step up and trying to get filled, higher and higher up the page, there's really no reason why you should kind of pull your offers down and try and get filled at a lower price. Wait until it trades it out. If we're seeing the seller step in and then he can take back 3 or 4 or 5 ticks of ground, then maybe you can start offering a little lower than you initially had anticipated. But until then, wait until it gets to the area that you're looking to get out from. The aggression is there and the price action is there. That's what will make all the difference. One more little point that I'd like to make, if we just go back to this, one more little point I'd like to make is effectively the difference between trading with the price action as opposed to not trading with the price action. So in a scenario where you wanted to just play for the breakout between these 87s up to these 95s, so just be conservative, you wanted to take this 9 ticks of meat out of the market. Now, if you were conservative and you're just trading on a price action chart, if you're just plainly trading on a price action chart, you would have seen the initial balance like this, as soon as it broke out, you would have entered your long here. And then effectively you would have been filled at your 95s. But that's essentially, you've got 9 ticks of reward. And from 87s, you're going to probably risk 2 to 3 ticks. So let's say 3 ticks. So that's a 1 to 3 risk reward ratio on that trade. Now effectively we had gotten filled at 83s, I believe, or 84s. Let's just say we got filled at 84s. Now we got filled essentially where we would have been putting our stop on the trade. So that in scenario 1, if we just went according to a price chart, that would have been our risk reward scenario. Now because we had the advantage of looking at the price ladder and understanding where the actual buyers came into the equation, we got ourselves 3 ticks better. 3 ticks better price. So in that case, we've got 12 ticks to, let's say again, an equivalent 3 tick risk. So 12 ticks of reward for 3 ticks of risk. Now we're looking at 1 to 4. 1 tick of risk, 1 tick of risk for every 4 ticks of reward, and that is basically summing up how your edge can be multiplied by using the price ladder, looking at the price action, and effectively giving yourself a head start before the move takes place. To be a bit prudent, you could have waited to buy around 87s, 88s, but the buying already come in earlier, the aggression had come in earlier, and that actually gives you the benefit, and that gives you effectively the edge of trading order flow. If I had to just put that and sum it up really quickly in just one setup, how you could have improved your risk reward statistics. Right. Thank you very much, guys, for listening. Hopefully you guys have a great rest of the trading day. Stay tuned for more. Tomorrow I'll be doing an FX and commodity stream, and hopefully we'll have a profitable day in the meantime. Bye-bye for now.